In this video, I will explain how you can approach multiple choice questions relating to absorption costing. Let's have a look at Cambridge Specimen Paper 1, which was from 2016. Question 24. A company is reviewing its costs. It discovers the following in respect of its factory supervision expenses. The output was 8,000 units. The cost per unit is then $8. If the output is 10,000 units, the cost per unit is $6.40. What type of cost is this an example of? Well, as can clearly be seen here, the cost per unit is changing the more units are being made. In other words, this must be a fixed cost because the more that is made, the lower the cost per unit. So therefore, you would choose A from the selection available. Question 25. Which statement is correct? Let's have a look at each of these in turn. A. Fixed costs per unit decrease as production increases. As we saw above in the previous question, this is true. B. Total fixed costs decrease as production increases. This is completely incorrect. Firstly, by definition, when production changes, fixed costs do not change. And secondly, costs usually increase with increased production. C. Total variable costs decrease as production increases. Although variable costs do change as production changes, you would expect them to do the same as the production. So if production increases, the variable costs should also increase. D. The variable costs per unit decrease as production increases. This is false. By definition, variable costs per unit stay the same as the overall cost will change or be variable. Therefore, you will choose A as your answer. This is the only suitable option. Number 26. Which statements about absorption costing are correct? Let's have a look at them each in turn before we look at what options are available to us. Remember that absorption costing means that we are taking all our manufacturing costs and allocating them to individual units that are being produced. So, number 1, it apportions overheads between production and service departments. Yes, this is true. The overheads are divided between different products that are being produced as well as other departments that are offering some kind of service or whatever within the business. Number 2, it enables a company to know its break-even level of production. No, this is false. The break-even is determined by comparing your fixed costs to the contribution margin and has nothing to do with absorption costing. Number 3, it leads to higher inventory valuations than marginal costing. This is true. Remember that your absorption costing is allocating your overheads to a cost per product, whereas marginal costing looks only at the variable costs per product and does not take fixed overheads into account. So number 3 is also true. Number 4, it is used by management for make or buy decisions. This is false. A make or buy decision simply refers to deciding what is the cost of making the product compared to what is the cost of buying the product from somewhere else, and then seeing which is going to be the cheaper alternative. This does not refer to absorption costing at all. So our options available that we want are numbers 1 and 3, which are both true. So therefore, B will be the answer that you need to select. Number 29. The following data applies to a business. We are given the budgeted labor hours versus the actual labor hours and the budgeted overheads and the actual overheads. The question asks, what is the amount of overhead over or under absorbed? Remember that these overheads are going to be allocated to the products based on the labor hours in this case. So the first thing we need to do is look at the budgeted overheads and the budgeted number of hours to work out the budgeted absorption rate, which you can see in this case would be $15 by taking $150,000 divided by the 10,000 labor hours. So that means that $15 will be allocated to each labor hour and therefore to the different products that are being made based on the labor hours to produce each product. If the actual labor hours are going to be different, that means that the overheads are not actually going to be apportioned correctly. For a moment, let's just forget that the actual overheads differed from the budgeted overheads. Even if the actual overheads were the budgeted 150,000, if you are only allocating 9,500 hours at $15 instead of 10,000 at those $15, that means that a smaller amount of overheads, in other words, 15 times 9,500 would be the overheads that actually are going to be absorbed. And that means that there would be an under absorption of $7,500. However, you do also need to account for the fact that your actual overheads were more than expected, because that means that now the difference between the budget and the actual of $10,000 is also going to be under-absorbed, as it has not been taken into account in the absorption rate of $15. If it had been, this rate would be higher. So therefore, we have under-absorbed 7,500 based on the labor hours and an additional $10,000 based on the actual overheads. And if you add those two figures together, you get a total of $17,500 that were under-absorbed. And if you look at the options available, you would want to select D as your answer. This type of question is in fact quite common, as you will see. It does come up very often. When you first encounter it, it can be seen to be quite complex, but actually it's not. Just approach it logically and look at what we did. The first thing was we worked out what was the absorption rate based on the budgeted overheads. You then have a look at the labor hours, and given the fact that your absorption rate is calculated as the overhead divided by the number of hours, where your hours are less, it means that your absorption rate should have been higher, and so therefore you are under-absorbed. The actual overheads, because it's overheads divided by hours, if overheads is higher, again, the rate should have been higher, and therefore it was under-absorbed. Let's have a look now at the next questions that come from Cambridge, March 2016, paper 1-2, question 23. A production center uses 20,000 machine hours and 17,000 labor hours each month. Which formula is used to calculate the overhead absorption rate? Now remember that the absorption rate can be calculated based on a number of different criteria depending on what best suits your business. If you are looking at the machine hours, you would say the overheads divided by the machine hours. If you were to use the labor hours, you would say the overheads divided by the labor hours. However, in this case, you are given both. Therefore, what you need to do is look and see which are actually the most relevant. In this case, you can see that there are more machine hours than labor hours. 20,000 is higher than 17,000, which means that this business is capital intensive. There's more machinery rather than being labor intensive. And because it's capital intensive, we therefore would want to use this 20,000 of machine hours. So let's now look at the options available. Machine hours divided by overhead cost is completely wrong. You would want to put it the other way around. The overhead cost should appear at the top, divided by the machine hours at the bottom. Number B has got the overhead cost at the top, but it's got labor hours at the bottom, and this is incorrect because we have a capital intensive business. Number C is quite an interesting idea. It takes both your labor hours and machine hours into account. However, this is actually more complex and wouldn't actually work in the long run, so we're not going to use C, as clever as it might look. D is the answer that we are looking for. We want to take the total overhead cost divided by the total machine hours because the business is capital intensive. So this is a very important thing to consider when you're deciding whether to use your machine hours or your labor hours. Simply have a look and see which is the higher number of hours. Question 24. The following information is available. You are given your budgeted overheads and direct labor and your actual overheads and direct labor. The overhead absorption rate is based on direct labor hours. Well, given the fact that we've been told the hours here for labor, this is what you would expect. But this sentence here simply confirms that for you, and it is always a good idea just to double check your information. The question asks, what is the amount of overhead over-absorbed or under-absorbed? Does this question remind you of anything? Do you remember that a little while back I said to you that this kind of question comes up very often? Well, here's another example of it. Remember that the first thing we need to do is work out the actual the budgeted absorption rate. In other words, our $60,000 divided by the 30,000 direct labor hours available means that we are going to budget for $2 per hour, and that's what would be absorbed in production. However, the actual direct labor is more than what we had budgeted for. And if your actual hours are more than what you budgeted, it means that your absorption rate should have been lower than what you budgeted, and therefore you will have absorbed more than what you should have. So in this case, it's $10,000 over-absorbed for the $2 per hour times the 5,000 hours that were higher than expected. The actual overheads also need to be compared to those budgeted, and you can very easily see that the difference is $6,000 that were higher, which means that 6,000 would have been under-absorbed. In this case now, we have got an amount of over-absorption and an amount of under-absorption. So they sort of set each other off. You need to find the net effect, which in this case is $4,000 over-absorbed. In other words, you are going to select A as your answer. Question 26. A business produces and sells watches. In 2015, 4,000 watches were produced and 3,600 watches were sold. It's very important to identify the difference between these two things. The 4,000 is your total manufactured or made, but the 3,600 relates to your sales and obviously the cost of sales relating to that. You are also given a number of other figures per unit. You are told your direct materials, your direct labor, and your variable selling expenses all per unit, and those are all variable costs that would relate to the products. Then you are also given your fixed manufacturing overheads and your fixed administrative costs, also as a figure per unit. Now, for this question, you are asked, what is the cost of goods sold if the business uses absorption costing? Absorption costing means that you are going to take overheads into account, but remember that cost of sales only considers production costs. In other words, direct materials, direct labor, and your manufacturing overheads. The variable selling expenses and the fixed administrative costs are both operating expenses and will therefore be ignored in this calculation. Now, remember that I said to you, we only want to consider the 3,600 units that are sold. And so therefore, if we're using the absorption costing, we are going to use the 60 materials plus the 80 for labor plus the 45 for manufacturing overheads. And because we are using absorption costing, we can take the per unit amount over here and factor that in. Remember that there were more units that were produced, but they are sitting on hand somewhere, and so the manufacturing overhead cost per unit for those has been taken into account in your closing inventory. So you only need to worry about the 3,600 sold times the total of $185 per unit absorption cost gives you a total of $666,000 as your cost of sales for this period. So you would select B. Let's now look at Cambridge, June 2016, paper 1-1. Question 24. A business pays its employees $2 for each unit of X that they assemble and $3.20 for each unit of Y. Monthly output is usually 1,800 units of X, 1,000 units of Y. The factory supervisor is paid $1,000 per month. What is the direct labor cost per month? To calculate the direct labor cost, you want to use your costs for both X and for Y. Your factory supervisor, however, is not relating directly to either of these products and is therefore an indirect labor cost or an overhead and will therefore be excluded from this calculation. So for X, we will say $2 times that 1,800 units produced to get $3,600 for X. And for Y, we will use $3.20 times the 1,000 units of Y to get $3,200 as the direct labor cost for Y. We can then add these together to get a total direct labor cost of $6,800. Notice that this $1,000 over here is not used anywhere in this calculation because it is an indirect overhead. We'll then find number A is the answer that we are looking for. Question 25. A garage owner paid the following costs: mechanics' wages, garage equipment repairs, spare parts used to repair vehicles, and rent for the garage premises. Which of these are direct costs? Well, firstly, we need to make sure that we understand what type of business we are actually referring to here. Otherwise, you're going to get very confused. For example, mechanics' wages could be seen as an overhead cost of somebody who's simply going to fix the machinery in my factory. However, if you go back and look over here, a garage owner means that you are looking at a garage where cars are serviced. In other words, people bring their cars in for repairs. So, in this case, the mechanics' wages would in fact be a direct cost, as they are very important in producing the actual main business activity, in other words, cars. And so this is a direct cost. Number 2, however, is the repairs of the garage equipment. Now, where in number 1, we were talking about repairing the cars, which is the product that we are actually producing, or the services, or the main business activity, however you want to look at it. Number 2 is referring to repairs of the equipment that we are using in the garage in order to produce those fixed cars. So this one over here is actually going to be an indirect overhead expense because the repairs of the garage equipment cannot be directly charged to the servicing of a particular car. 3, however, the spare parts used to repair vehicles. This cost can be directly allocated to each particular car as it is serviced, and so that is a direct cost. Number 4, rent paid for garage premises is similar to 2. It is also a factory overhead and therefore an indirect cost. So, which of these are direct costs? Only 1 and 3 suit our requirements, and therefore we would choose C as our answer. Question 26. A business incurs the following costs. Number 1, direct material and direct labor costs. Number 2, indirect factory production overheads. Number 3, admin expenses. And number 4, distribution costs. Notice that they have actually been divided up into the different cost categories, and just to quickly run it by you, notice that number 1 is all your prime costs or direct costs. Number 2 is your overheads that would still be taken into account in your manufacturing costs, but it is an indirect cost here. Number 3 and 4 are both going to be costs of operating or running the business and would therefore be shown on the statement of income and not the manufacturing account. Let's see now what is asked. Which costs are included in the cost per unit using absorption costing? Where we are looking at a cost per unit, it means that we are focusing on the manufacturing costs. So 3 and 4 automatically need to be excluded. Absorption costing tells us that we are accounting for the overheads and allocating these to the different products. So therefore 1 and 2 are going to be the options that we need, and we would therefore choose B as the answer. Number 27. Have a look at this question. By now you certainly should recognize it. This is the third question in these 2016 papers that asks for the same thing. What was the over or under absorption of overheads? Remember, the first thing we do is look at the budgeted absorption rate. In other words, budgeted overheads of $200,000 divided by budgeted machine hours of 40,000 hours to get an absorption rate of $5 per machine hour. In the previous question, we were using labor hours. Now we're using machine hours. Your technique is actually exactly the same. If you can do it for one, you can do it for the other. The actual hours were a whole lot more than budgeted. In fact, it was 50% greater than what we thought it would be. So a lot more machine hours were used, which means there must have been a lot of over absorption here. And you can calculate it as the extra 20,000 hours more than what we're budgeted at the absorption rate of $5, which then gives you $100,000 over absorbed. However, the actual overheads were also higher than expected. And if you were using a lot more machine hours, one can actually understand how this could certainly be the case. But what this means is that you went over budget by $40,000, and therefore this extra $40,000 overheads would not have been absorbed, and you would therefore be $40,000 under absorbed. Yet again, you can see that to some extent these two amounts offset each other, so you need to look for the net effect, which will be $60,000 over absorbed. If you look at the options that are available to you, you would choose C as your answer. Let's now look at Cambridge, June 2016, paper 1-2, question 22. An employee works a standard 40-hour week. In that time, he is expected to make 200 complete units. He is paid a bonus of $10 for every hour saved in production. Remember that every hour that is saved will impact also on your machine hours that need to be used, your overheads, etc., because it means that your productivity is increasing and your overheads will be able to be split amongst more products. And that is why they might decide to give him a bonus for every hour that he saves. In week 25, which is simply numbering the weeks that you know when it is, it would be in the middle of the year, probably the last week in June or third week in June, thereabouts. He worked 44 hours and produced 250 units. Given the fact that he worked 4 hours more than he normally would, or a standard hour, a standard week, you would expect that he should definitely produce more than 200 units. However, we need to check whether he has produced more than he should have, given the fact that he worked more hours. So the logical thing to do to start with is to say, if he's supposed to make 200 complete units in 40 hours, you can work that out as an average of 5 units per hour. In 44 hours, therefore, he should have produced 220 units by simply saying the 44 hours times the 5 units per hour that we calculated. So 220 units is what you would expect that he should have made in that time that he did actually work. That means that he actually made 30 more than what was expected of him, because he made 250, which is 30 higher than the 220 that we've calculated as standard, given his number of hours. So if he has produced an extra 30 units, let's now convert that back to the hours, and you can see that 30 units divided by 5 units means that he saved 6 hours in this week. That means that he should get a bonus of $60, which is $10 per hour for 6 hours. And you can then choose D as your answer. Question 24. A manager is preparing a quotation for job 88. Again, this number here doesn't really matter. It's just labeling a job. It's saying that it is for a particular job or product. A specialized technician is hired to work for this job only. The fact that he is just coming to work on that particular job or product means that his wages are definitely going to be a direct cost. However, he will use machinery that the company already owns. So the company has got the machinery, and the machinery is being used on a variety of different jobs. And so therefore, that machinery depreciation is actually going to be an overhead cost or an indirect cost. So if we have a look, we want to find an answer that discusses the wages as direct, but the machinery depreciation as indirect. And if you look at all the options, you will soon discover that D is the only one that suits you. And the last paper we will look at now is Cambridge, November 2016, paper 1-2. Let's have a look at question 23. A manufacturing company employs 20 workers who are paid a basic rate of $30 per hour for a 40-hour week. To meet a special order, the workers each worked 50 hours and were paid a premium of 40% over basic rate for the overtime. This is perfectly normal. If one is working overtime, it means that you are working longer hours than normal, and this is cutting into family time and the worker's own personal time. And so therefore they would be compensated usually by earning a wage that is higher than normal. In other words, if it's a 40% over the basic rate, it means it would be 140% of that $30 per hour. We want to now work out what was the value of wages paid to meet the special order. So, in this particular week, we can see that they worked 50 hours. Those 50 hours now need to be calculated by firstly looking at the 40 hours that would have been normal time times the rate of $30 per hour times 20 workers to get a total amount of $24,000 for the normal time for those direct wages. In addition, you need to calculate the overtime. The overtime, there were also 20 workers, but this time they are getting a rate of $42 per hour. Remember I said it's the basic $30, but you need to add 40% to that, and the easiest way of calculating is therefore simply to say times 100% to take the 30 into account, and then another 40% for the premium. In other words, times 140%. So we'll say 20 workers times the overtime rate of $42 times the extra overtime hours, which would be the total of 50 needed minus the 40 normal time to give you the 10 hours that were at overtime. This calculation then tells you that overtime of $8,400 must have been paid. The total wages, therefore, would have been the normal time of 24,000 plus the overtime of 8,400 to get $32,400 as the total wages for that special order, and you would choose B. Question 24. A manufacturing business is currently operating at full capacity. In other words, they are unable to produce any more with the resources at their disposal currently. As part of an expansion program to increase production capacity, the business intends to employ an additional factory supervisor. So in other words, they want to be able to produce more units, and in order to do this, an additional cost now has to be incurred. How are the total supervisory salaries classified? Well, by definition, the additional supervisor is going to be needed when the production and therefore the total number of workers increases, because we know that we are already working at capacity, and so we would employ him in order to expand the factory. That means that the initial supervised cost would be up until that capacity point and would then step up to where you are able to produce at a higher capacity, and so therefore this is known as a stepped cost. If we look at the options available, we would choose C. A, fixed cost, would not apply, as that would mean that your supervisor is going to stay the same no matter how many you produce up to infinity. And so the fact that you're bringing in a second supervisor to increase capacity does not relate. Semi-variable means that some of the costs are fixed and some are variable, and this is not the case. Once you have increased the capacity, it is fixed for that period. However, because it was fixed at a lower amount for the smaller capacity, that is why it is a stepped cost. Variable cost relates to costs that change depending on how production changes, but that means for every unit that production changes. In this case, there is a wide band at which production can change and the cost will remain the same. We would therefore choose C as the answer to this question. Question 25. In a manufacturing business, the following could occur, and we need to see which situations would result in an under-absorption of overhead expenditure. Although this is different to those other three questions that we did, it might help you to understand them a little bit better, or vice versa. Perhaps doing those examples might help you to understand this question a little better. To start with, let's just look at how we work out the absorption rate. The absorption rate is going to be based on the total overheads divided by, in this case, the number of units produced, although it could also be the machine hours or the labor hours, depending on how you choose to value it. If you have your actual overheads being higher than the budgeted overheads, it means that this amount on top, the numerator, is higher than it should have been. And therefore, if the overheads are smaller, the numerator is smaller than it should have been. And if it's less than what you would have expected, it means that you would actually have over-absorbed the cost because your overall absorption rate is higher than it needed to be. Number two, if the actual overheads are higher than what was budgeted, it means that your numerator is higher than you expected, and therefore your absorption rate should have been higher, and so therefore things would have been under-absorbed. Number three, the units produced were smaller than budgeted. If we look at our calculation here, you can see that this is the denominator, and if in reality you have less units to allocate these costs across, and you haven't factored that in when you were budgeting, it means that you would have under-absorbed, because again, your absorption rate should have been higher than what it actually was. Number four, if the units produced are higher than budgeted, you would be over-absorbed. So now if we have a look over here at the answers, you can see that both 2 and 3 give us situations where the overheads are under absorbed. And so therefore we want an